Hey everyone, and welcome to This Explainer. I'm stepping in today as part of the Liberatum AI Vault team, or LAV for short. We spend a lot of our time digging into some seriously complex data, and today we're taking a calm, documentary-style look at a massive structural shift happening right under our noses in global finance. Literally, we are witnessing the architecture of our financial world being rewritten from the ground up. It's a transition that's just as fascinating as it is consequential, so let's just dive right into this.
What exactly is the Clarity Act? You know, it's really easy to just brush this act off as your run-of-the-mill Washington red tape. But honestly, it's a historic moment. This is a law that actually attempts to give a completely new financial framework, a name, a definition, and a set of real boundaries. When you really think about it, this isn't simply a story about whether crypto prices are going to go up or down today. It's about classification, it's about ownership, and ultimately, it's about who gets to build the next financial system. Because for years, digital assets have lived in this totally fragmented, uncertain legal gray area. Sure, they could be traded and held, but the framework around them was, well, entirely undefined.
Just think about it for a second. What happens when the financial system finally decides how digital assets should fit inside it? Because when regulation stops treating an emerging technology as an exception or some weird loophole and actually starts building rules specifically for it, the entire architecture changes.
Block 1. The regulatory paradigm shift.
To really grasp the shift, we gotta look at where we came from. For decades, our markets relied on these familiar, super rigid categories. There's this stark contrast going on right now. In the old world, you have physical institutions, banks, brokers, exchanges, traditional securities. But in the internet era, we're living in a world of borderless networks. A protocol can coordinate thousands of participants without a centralized headquarters anywhere in sight, and value moves natively through software. The technology completely changed, but the legal categories just didn't keep up.
And that brings us to the real crux of the issue. How do you regulate something that doesn't behave like anything that came before it? That's the million-dollar question, right? The true paradigm shift we're observing is the realization that decentralized networks and digital commodities simply don't fit into those old boxes. A digital commodity is absolutely not the same thing as a traditional security. Once the law starts to actually recognize those fundamental differences, the entire conversation shifts. We stop asking, how do we force crypto into the old system, and start asking, what kind of system should exist for digital assets?
Which leads us right here. When we finally stop trying to force square pegs into round holes, we get clarity. And look, capital is inherently cautious. Nobody wants to build a skyscraper on quicksand, right? Institutions hesitate. But when the rules become clearer, that hesitation vanishes. Capital begins to flow. And as our source material notes, uncertainty turns into infrastructure. Clear rules are what allow the market to mature from the experimental margins of finance directly into the core architectural finance itself.
Block 2. Where does Bitcoin go from here?
If the system is carving out a legitimate legal space for digital assets, we have to talk about the absolute prime example, Bitcoin. Let's trace its evolution, because it spent years moving through these different identities. At first, it was viewed mostly as digital money. Then, it morphed into a highly speculative asset. From there, the whole narrative shifted to digital gold. But right now, it's increasingly being recognized as a form of digital capital. And capital doesn't have to be spent on coffee every morning to be useful. It can be stored, it can be transferred, and it can be pledged.
I want you to try and visualize a system where Bitcoin isn't just this token being endlessly day traded by retail investors. Instead, picture it acting as a foundational asset beneath continuous global financial activity. It actually becomes part of the collateral layer. It becomes a staple in institutional treasury management. It serves as the bedrock for global 24/7 on-chain markets. It basically becomes a scarce digital asset sitting quietly underneath immense layers of financial activity.
But here is a vital reality check. Regulatory clarity isn't some magic wand that makes every single token valuable. In fact, regulation makes markets highly selective. It ruthlessly separates real utility and actual infrastructure from temporary, fleeting speculation. The projects providing real economic value, they're going to thrive. Meanwhile, the assets built on dog memes and pure hype might finally fade away. The financial system finally gets a framework for deciding what actually deserves to stay.
Block 3. When regulation changed finance.
Now, it's really easy to look at digital assets and feel like this is all entirely unprecedented or, frankly, intimidating. But if we look back, these massive structural transitions have absolutely happened before in our financial history. The sequence is always a chain reaction. Whenever markets move from informal arrangements to regulated institutions, clearer rules create trust. That trust naturally attracts capital. Capital then funds the creation of robust infrastructure. And finally, that infrastructure allows the markets to scale to entirely new levels. Legal boundaries almost always precede massive market scaling.
So, the big takeaway here, uncertainty is incredibly expensive. Now, regulations like the Clarity Act, they don't guarantee an asset will succeed or that you're going to make money, but they do reduce the hesitation of businesses and major institutions. By clearly defining what an asset actually is, whether it's a commodity, a security, or a payment instrument, these rules give the future a stable foundation to develop on. And in finance, stability is quite literally everything.
Block 4, the financial system is learning a new language.
Underneath all the political back and forth and the loud headlines, a much deeper reality is taking shape. We are slowly moving away from centuries of reliance on purely physical intermediaries and paper contracts and shifting toward native, continuous digital networks. It's fascinating how seamlessly different digital assets connect the old traditional world to this powerful new digital layer. Bitcoin steps into the role of the capital and collateral layer. Stablecoins become the continuous digital payments layer, settling transactions instantly. And tokenized assets? They provide programmable ownership for traditional securities. We are looking at a market that never closes, operating 24 hours a day, 7 days a week.
The most crucial realization here is that digital assets already exist. The tech is already built. It's out in the wild. So the only remaining question, the one the legacy financial system is currently trying to answer is, how should they exist inside the financial system? How do these old and new worlds connect? And who actually gets to build the institutions that sit right on top of this intersection of technology, capital, and law?
Which brings us to our final reflection. What are we actually building?
When we zoom out from the daily price charts and the endless regulatory filings, you start to realize that every single major financial transformation follows this exact sequence of adoption. Seemingly isolated developments eventually weave together into a completely new reality. The technology always arrives first. Then the capital follows the technology. The institutions are forced to adapt to the capital. And finally, the law tries to catch up to the institutions. The debates around frameworks like the Clarity Act, they're simply this final step playing out in real time. It is literally the law catching up to the reality of digital finance.
And you know, when that final step is complete, we witness the creation of an entirely new layer beneath the financial system. Once digital assets transition from being speculative, Wild West experiments into foundational, boring infrastructure, the narrative completely flips. People stop asking if crypto is real, and they start asking what they can actually build on top of it.
So the big question isn't just what Bitcoin will become anymore. The much bigger, much more profound question is, what kind of financial system are we going to build around it? Because while every generation inherits a financial architecture, every generation also gets the incredible opportunity to build the next one. Thank you so much for joining me for this explainer. From all of us at Libertum AI Vault, the LAV team, keep questioning, keep learning, and we'll see you next time.